I mean, I don't know if this is the bottom. I think you have a lot more conviction about that than I do. But definitely, I think that it's forming a bottom here. I think a big part of this had, to be honest, just to do with the spot ETFs versus what we're seeing with spot Bitcoin ETFs. They have had cumulative outflows since inception compared to the $18 billion in inflows that spot Bitcoin ETFs have had.
David Duong is cautiously discussing the possibility that the crypto market is reaching a bottom, though he isn't as confident about it as others might be. He explains that a key factor influencing the market is the difference between the performance of spot Bitcoin ETFs and other types of ETFs. While spot Bitcoin ETFs have seen strong demand with about $18 billion in inflows, other types of ETFs have experienced cumulative outflows since their inception. This contrast is shaping market dynamics, suggesting that spot Bitcoin ETFs are playing a significant role in the market's current state.
There's different reasons why I think that's happening. One, the market environment is just very different in terms of the launch between what we saw with spot Bitcoin ETFs in January of this year versus July for the spot ETH ETFs this year. I think that explains some of the difference, but also, I think for a lot of these managers, they have some relative difficulty in educating new investors on how Ethereum supply schedule works versus like Bitcoin dead simple, like 21 million supply cap. How smart contract utility kind of operates, like the absence of staking yields. I think all these things are a little bit more difficult for them, even though I don't think they should be. I think that may be contributing to some of the lack of appetite for these ETH ETFs. And by the way, I don't think we should be celebrating if it was, if we genuinely believe it was like the death of something and you're in this community, like, and granted, I know that we're somewhat tribal inside of crypto. It's like, I wouldn't be celebrating if it was one L1 versus another. But there are a lot of themes that are happening specific to Ethereum that I do recognize, like the deflationary ultrasound money thesis, I think has been deflated somewhat, not to have play on words, but, I think that's
that one.
I never really loved that one anyway. And I think that it hasn't served it well inside of this cycle. So I think that, plus you have new technological competitors with Solana, other next generation chains. I think all of that's just kind of eating into it as well. So I think it was interesting to see Bitcoin and, the broader crypto market kind of weakening after the US markets closed, and it really kind of happened into Asia hours. And it kind of shows you that crypto is still being used as a proxy for a lot of traditional assets. So when there's nothing else to trade, people are trading crypto, which I think kind of feeds into some of the quasi correlations that you're seeing. That we're still inside a very small kind of range with that, by the way. Like, it's still somewhere between 0 to 0.4, which typically from a statistical perspective kind of shows you it's fairly weak correlation or very no relationship almost. But I think just markets are getting really edgy ahead of the labor data that we're getting this week, because we have jolts, we have non-farm payrolls. I think markets may be preemptively just reducing ahead of that information because we're still not through the woods yet in terms of people being concerned about a recession and what the Fed is going to do about it on September 17 and 18. Even though you see that the preferred measures for inflation, like the PCE, they're in line with expectations. I don't think the disinflationary trend has changed. But if the unemployment rate comes down on September 6th and it's, enough to scare people, I think that that's going to dampen people's desire to kind of put capital to work here.
Bitcoin's price has declined by more than 3% over the past 7 days, erasing much of the gains accumulated since its August 5th low of $49,500. Over the last 90 days, Bitcoin's value has dropped by 20%. And its daily trading volume has decreased by 32%. Several indicators suggest that a deeper correction is likely, making a quick recovery from current levels seem unlikely. Analysts at 10x Research predict that Bitcoin could settle in the low $50,000 range. Marcus Thalen, an analyst at 10x Research, shared a chart showing that Bitcoin's recent correction broke below the ascending trend line of an asymmetrical triangle, pointing to a potential retest of the August 5th lows below $50,000. According to Thalen, a drop below $50,000 seems inevitable. Michael Vapey, founder of MN Capital, shares a similar outlook, noting that Bitcoin recently broke below the August 15th low of $56,000, but failed to generate the expected upward bounce. This puts Bitcoin at risk of falling further to $53,000 or even $49,000 before rebounding. Glassnode analysts also expect Bitcoin to slide toward $51,000, which they view as a critical support level. Maintaining this price range is essential for future price appreciation.
Yeah, I mean, the reality is presidents and governments in general can do very little for an economy. But because of the election cycles as well, there is just so much disproportionate attention on their fiscal policies, how they're going to kickstart the economy if it's weaker, for example, or what they're going to do in order to kind of change things. Okay, corporate tax rates, what are they going to, are they going to allow like this, top tier 37% tax rate to kind of lapse, or is it going to go back higher again for higher income people, for example? Like, how is that going to affect the economy? All that kind of just feeds in and weighs down market sentiment, I think. And I think it's very kind of hard to get outside of that. And we just happen to be in a period of time where things have been mostly doing pretty well. I mean, like, honestly, I think most people from an economic perspective would just be happy being like, just stay the course. Let's just not do anything and just kind of keep it here. But I don't think that's going to be the case. And we are expecting some sort of change. And we're just trying to understand how that change is going to affect us specifically.
Bitcoin dropped from a high of $65,000 on August 25th to a 3-week low of $55,560 on September 4th, causing it to fall below the 200-day exponential moving average once again. Commenting on this price action, popular trader Skew noted that Bitcoin's price increase around the $58,000 level suggests strong resistance for Bitcoin bulls in the short term. As of publication, the 200-day EMA stood at $59,500, above the spot price, which is a key line of defense for Bitcoin in market cycles. Falling below this level exposes Bitcoin to further downside risks. According to data from on-chain aggregator Into the Block, Bitcoin faces significant resistance on the upside, with the next major zone between $57,988 and $59,668, where about 1.98 million addresses purchased approximately 929,367 BTC. This suggests that Bitcoin's upward momentum could stall, increasing the likelihood of further corrections. From a technical perspective, Bitcoin's recent price action has formed a bear flag pattern, a bearish setup that occurs when price consolidates in an upward sloping range following a sharp decline. Bear flags typically break below the lower trendline and result in a drop equal to the height of the previous downtrend, which could bring Bitcoin down to $44,500, a level last seen on February 9th. Additionally, Bitcoin's daily relative strength index is at 44, indicating bearish market conditions and increasing the chances of Bitcoin reaching its bear flag target. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.